still just nearly setups. Nothing solid. Well, if you don't find anything soon, I suggest we wrap it up. Yeah, let's do that. I'll turn off all the tools. Honestly, I don't see the point in trading today. We've earned very well. Let's take a look at our results. They're quite impressive. Scrolling down, look at this beauty. One, two, three, four, five, six. Okay, we'll stop count, just look. "27 trades we made, great job." Of course, it wasn't 27 setups, we had double and triple trades as well, but the fact remains we moved 27,000 bucks through the market in an hour and earned almost 10,000 bucks. Yes, we didn't call the last losing trade, but we earned 10,000 bucks in just over an hour. And if you were here for the whole stream, you'll agree, it's not that hard. With a bit of practice, you can achieve the same results. Let me help you by answering your question, guys. Okay, guys, I'm ready to answer your questions, and let's start. Let's start with the first one. I read it. "Hey Leya, can you explain how MACD works, but like simple? Read about it online, but still don't get it. Super confusing." Okay. Of course, I'll try to explain more simply. I thought I already explained it in easy way, but I'll give it another shot. MACD consists of two moving averages and a histogram. The moving averages have different periods. They're above zero, then the trend is positive, and below zero, then it's negative. When they cross, you can assume the trend might soon reverse. You can customize the moving average periods as you like. The histogram is even simpler. It just subtracts one moving average from the other and shows the resulting fluctuations as candles. The histogram is mostly for observation, and personally, I not so often rely on it. But in some strategies, it can play a key role. And I hope this answers your question. Okay, let's go. Oh, let me find the second questions. Okay, here it is. Let me read it. "Leya, you look so amazing. Oh my god, you're awesome and such a nice and cute." Thank you very much. But if you have any questions about this webinar, feel free to ask them here. Okay, and I will go to third question, I think, yes. Okay, let's wait a little bit. "Hi Leya, what MA period should I use for 1 hour trades? Thanks in advance." That's a good question, and it depends on the strategy. If you're trading a moving average with an accelerator like RSI or MACD, you can choose a period of 50. Strategies like this need a longer moving average. This is also a strategy involving two moving averages where you enter trades when the price touches one of them or when they cross. In this case, you can set one moving average with a period of 10 and the other with a period of 15. And let's move on. Okay, what was this martingale thing? Another great question. And in short, it means doubling the trade size to cover a previous loss. This strategy carries high risk, but using it can help you get profit. And the key to martingale is to use it only when you're confident about the setup. I've already given an example, when you just miss taking a profit but see the price is likely to move in your favor. Okay, and moving on to the next one. Hi Leya, thanks for the webinar. You're so good at explaining stuff. Can you please tell what correction is and how to spot it? Okay, you're welcome. I'm glad you enjoying it. I hope it helps with your trading. As for corrections, let's break it down. Simply put, it's when the price of a stock or currency moves in the opposite direction of the main trend. Corrections happen when the price has moved too far in one direction, causing participants on the opposite side to become more active. And sorry, my phone is ringing. Sorry guys. Okay. And at some point they temporarily take control of the movement. And how long will it last? It's impossible to know for sure. There are no guarantees in the market. But if the trend is new, corrections are more likely than full trend reversals. To minimize risk, I recommend keeping up with financial news about the assets you're trading. If there is major news on a trading day, the chances of a strong and long-lasting trend are much higher. You can also monitor trading volume. If you see small price fluctuations that suddenly become sharp and intense within a certain range, it's likely that some big player has entered the market. Major traders can sometimes even reverse trends, but they usually cause corrections that are followed by a continuation of the previous trend. I hope that answers your questions. And let's do one more question before wrapping up. And let me find it. Okay. Let me find something interesting. Yes, how many hours trading session is good? Actually, it depends on your trading style. If you're trading like 1-minute trades, it's high intensity trading as we did in this webinar. I don't recommend it trading for more than 1 hour. You'll get tired and start making mistakes. If you really want to trade for a couple of hours, take a break between sessions. Sorry guys, next time. Okay, you should rest, exercise, just refresh yourself and and only then return to the market. Well, that's it for our questions and answer session. Thank you for being at my webinar. Okay, let's wrap up it. All right, 1, 2, testing. Okay guys, can you hear me? Yes, looks like you can hear me and the video is fine too. Awesome! Welcome to all the beginners and just trading enthusiasts out there. I'm Leya, a trader with 6 years of experience and your guide to the world of finance. In today's webinar, I'll show you how traders think, make decisions, and manage risks. Plus, I'll share a couple of strategies that helped me to make my first 10,000 bucks in trading. Okay. Let's wait a little bit. And let's log into the account. I'll answer your questions at the end of this webinar. Let me show you the first strategy. Let's switch to the 50 seconds candles. The trade duration is 1 minute and the trade size is 10% of your deposit. Okay. Let's add currency pairs to make things easier. Yes. And let's get started. We don't need indicators for now, we'll trade based on levels, I think. Or maybe we should add some indicators after all. Let's watch. Yeah, let's do that, it will be easier. Let's add the moving average and maybe RSI. Yes. I want MACD. Perfect. Now let's set the moving average period to 50 and make it more visible. Save it. And we go trade. Oh, found one, right? Okay, I open a short trade because there is a clear downtrend here. We hit the moving average and MACD is below 0. Let's watch the situation and then analyze how the indicators work. I couldn't pass this opportunity. I had to open the trade. You can see for yourselves. Okay, it's going down. The price is being pulled down because we entered at the peak of the amplitude movement. Sellers have strengthened and we are going down with them. Yep. Alright, 3, 2, 1, and yes! Winning trade! Fantastic! Let's break down the indicators. I'll explain, but first let's change the trade duration to 2 minutes. We will keep the candle time frame the same. Okay, let's watch. Here's our moving average. It shows the average price over a specific period. For instance, a period of 50 means 50 candles. When the moving average touches the chart, it signals a potential reversal. That's because the price and the average price align, make it inconvenient for price to change direction. MACD's main feature is showing momentum strength. When it's above 0, buyers have their power. When it's below, sellers take the lead. As you can see, in this zone we were never below 0 until the drop started. Now that we've covered these, let's look for entry points. Oh, pounds. Okay. I open a long trade here because we've just hit 0 on MACD. Our long moving average, the 26 period one, is still above 0, which means the trend isn't over. Plus, we've reached the moving average, and yes, we are in the uptrend. And let's watch. By the way, how the webinar? If you're interested, I can get you even more excited. Want to? Check out my Telegram channel via the link in the description. And I share my market analysis where daily for free. It's no big deal for me, but someone might make a couple of $100. Oh, the trade is going in the opposite direction. Well, not by much. There is still chance. I hope it will go up. Yes, right there. A chance. Okay. Absolutely. Not bad, okay. Just a little more, please. Yes. And yes! Oh my god, that was unexpected. Looks like the trend decided to reverse after all. But we managed to win at the last moment. Great start, guys. But let's keep going. While I'm looking for a trade, feel free to ask your questions and I will answer them after trading. In the meantime, let me explain more about MACD. This indicator consists of 3 parts: the main line, the signal line, and the histogram. The histogram, as you have seen, is the red and green bars in the middle of the indicators. The green main line helps determine upward or downward momentum and its strength. It's a simple moving average that reacts to any price fluctuation. If the main line is above 0, the trend is considered bullish. If it's below 0, the trend is likely to be bearish. Okay, the red signal line is a smoothed version of the main line, so it's more gradual. It's used for visual trend evolution. Then combined with the main line, it can provide signals. For example, line crossovers often indicate potential reversals. And the MACD histogram is a visual representation of the relative momentums on the MACD line and signal line. It's calculated by subtracting one line from the other. It's a great tool for visual analysis. By the way, one of my students recently created his own course. I taught him everything I know, and you can click the link in Telegram and get it. Oh, here's a great setup. But I'm waiting, then price touch the moving average. And yes, opening a long position. We see an upward movement, the moving average is involved, and the MACD is about 0. This is a long trade based on our strategy. And let's see how our analysis plays out. The start looks so good. Yes, very good. The price is rising. There is a large wick on top, where sellers are clearly active, but we entered at the lower part of the amplitude. And did the chart freeze? It's just loading. Okay, let's wait. Yeah, oh my god. Here we go. Look at the dynamic. So we are in the lower part of the amplitude, relatively. Safe, okay. Oh my god, so fast. Okay, we're seeing beautiful rise. Yes. Oh no. Yeah, I'm sure. Almost. Okay, perfect. That's our trade. Again. It's time to relax and find another setup. Okay, here it is. Because we just touched the moving average, we see an upward momentum and contact with the moving average here. MACD is above 0 on both lines, so we can expect further growth. Well, I don't like this. Okay, maybe I should have waited and opened the trade right at the line. Maybe it was a mistake. But I didn't want you to wait. Okay, we still have time, we still have chance. It's dropping. The trade is a bit risky because we entered near a local maximum. But we are sticking to the strategy and seeing what happens. Oh, the price is dropping. Still, it's frustrating, guys. I rushed. I think it's lost. Yes, we lost 1,000 bucks, but we'll make it back. Of course we will. But here's the lesson, always stick right to the strategy. I took a risk when I entered this trade, and it might not pay off. Especially if you are a beginner. Let's continue. Well, we have found a setup where we can recover our loss. I will now open one trade first and see how it goes. If the price drops a bit lower, we'll open a second trade. Yeah, let's open the second one using the martingale method. We see a local uptrend. There is a breakout from the consolidation zone and move towards the moving average. On the MACD, we are above zero, so we are opening a long trade to cut the previous one. Let's now see. There is a reaction, very good. This is a good start. We have also entered around a recent maximum or resistance level, but we have broken through it. This level is no longer in play. We have cleared out all the sell orders from the book. So there are fewer. But the price doesn't seem to agree yet, which is strange. Yeah, it's dropping. Oh my god, this is frustrating. Look, we are seeing some growth. Nice. It's a tie for now. Let's keep watching. Let's go up. Too slowly. Still a tie. Come on. Yes. Yes. Oh my god. Yes. And yes. That was a rough. The first trade closed in profit, and the second one? Yes, the second one too. Oh my god. It was risky, it was nervous, but we did it. That had me on edge. Let's thank the market for these exciting and nerve-wracking trades today. Okay. Let's change currency pairs. Oh, we got something great. Yes. Opening a long trade. This trade looks nice. Well, if it works out, on the MACD we are above zero, there is an uptrend, and we have touched the moving average. Earlier, this zone acted as a resistance level, which the price just broke through and came back to. What? Where you go? The price is dropping. Looks like the sellers are out of steam. No green candles at all. Wait, something happening. Alright, come on. Yes, keep going. Oh my god, finally. The price dropped a lot, but now there is a chance for a huge rise. Where is the chance? Still 20 seconds left. Okay. It's not happening yet, but we are getting closer to the entry point. Just a little more, please. Oh no. We got stopped. Just not enough time. In 90% of cases we have won here, but not this time. The sellers were really strong. It's a shame, but we are back. And we will find another setup. Here's the previous trade. See, we were just a millisecond short. But let's keep looking. A chance has been missed, but there will be many more of these chances today. By the way, in my Telegram channel, I give subscribers a chance to earn money every day for free. But I also offer more detailed analytics, which is available through a subscription for a symbolic cost. It has a 65 win rate on trades. Don't miss this chance. Click the link and message the bot the word WIP. Sorry, not WIP, WIP Analytics. Sorry for waiting, guys, but I cannot find something interesting. So trades, we still don't have any setups. I'm checking other currency pairs, but no luck so far. Don't worry, we will soon change our strategy and trade in different way. Yes, maybe here. Now let's keep searching. There is nothing that fits the strategy so far, but it's better to keep looking than to enter a trade that doesn't align with the strategy and loss. Oh, here's something, but it's not quite what we want. Keep searching. This is another proper situation, but still not for our strategy. Touches with the moving average don't happen too often. As you can imagine, we just keep searching. Oh, here we go, found it. But let's wait a bit. Alright, I am opening. We see an uptrend, a move towards the moving average, and the MACD is above 0. I might open another trade later when they get closer. Alright, we've got a reaction. Yes, the price is rising. Yes, great reaction, beautiful. Too bad we didn't open a second trade. But well, don't worry about this dropping. It's too small. The drop is slowing down as it should. The price is now in a zone where it's more profitable to buy then sell. Okay, we are holding steady, very close to the moving average, which is right at the entry point. It's a little bit risky. We're so close now. I think we will win this trade. Yes, great! Great, my dear friend. This trade ended in profit. Okay, we could try entering again, but I would like to take a break and talk about something very important, guys. First, let's dive into a key topic, candlestick timeframes. Why go through the trouble of setting up your trading terminal when you can already see the price direction? The answer lies in technical analysis and the ease of tracking price movements. If you're trading 10-minute deals, what really matters is the price action over the past day. The rest? Not so much, unless there is news on major market trends impacting the charts. Now, if you're trading 10-minute deals on a 15-second time frame, you will drown in noise, both from indicators and the chart itself. On the flip side, if you're looking at a daily time frame where each candle represents an entire trading day, you won't catch the price swings and signals you actually need. You'll only see a single candle moving back and forth. Candles and indicators need to be set to match to the trade expiration time, so that you get up-to-date info along with trade's operation on a similar scale. This also ensures that the indicators provide the most reliable signals. Following the topic of timeframes, let's talk about indicators. Why bother adjusting them? And what's the difference between a moving average with a period of 50 and one with a period of 10? Here's the deal. The period represents the number of completed candles the indicator takes into account. So, in a period of 50, there are 50 candles. A moving average with a period of 10 reacts more quickly to price changes, while one with a period of 50 moves much more smoothly. Does it make sense, guys? Take the MACD indicator as example. It has two moving averages, the red and green one. The red line moves slower and is smoother because it has a longer period, while the green line reacts faster and is more dynamic. The period you choose directly impacts the indicator's sensitivity to price changes and how much noise it generates. For example, a moving average with a period of 50 is great for visually observing trends, and when combined with an accelerator like MACD, making trade decisions. A shorter period moving average, on the other hand, closely follows market movements but introduces more noise, which can complicate trading. I don't recommend beginners adjust indicator periods on their own. It's better to spend a couple of weeks observing how indicators behave with different periods. And also, you can check out the course by my top student. I've known them for almost 3 years. And their course includes everything I know myself. Click the link in Telegram and message the bot if you are serious about trading and want to start as soon as possible, guys. Okay, and let's back to trading. Let's close all the indicators. Let's close the currency pairs. Now we are going to trade from levels. What's a level? Let me show you. Here it is. Here are our levels. A level is a zone from which the price has bounced at least twice. Like here and here. A level below is also called a support level, while one above is a resistance level. When the price touches the support level, we open a long trade. At the resistance level, we go short. Levels appear because market participants cluster in these zones. When the price approaches a level, we either buy or sell. Over time, market tension grows and the level loses its strength. Let's choose some currency pairs. And go look for some trading opportunities. Wish me good luck, guys. Okay guys, I'm opening a long trade. Because we've got a solid support level right here, see it? We've bounced off it a bunch of times before, so we can expect some upward movement. Plus the trend is bullish. This one's looking great. Okay, we got an instant reaction on the chart. That's nice, but it's too early to call it. Look at these wild swings. This instrument moves like this all the time. Yes. Perfect. That's a reaction. Unbelievable. Straight out the textbook. Oh my god. So beautiful. Guys, if you have some question about levels, text me. I'll answer in the end of webinar. And the price just keeps climbing. Folks, if you want to trade like this, join my Telegram channel through the link below. I share my daily analysis there for free, and a lot of my trades look just like this.